So before we get into the smaller time frames, we need to have a look at the overall market structure, which is obviously bullish. For the past few weeks, we have seen a retracement in price action before we saw buy stops taken, creating the all-time highs. Now, the order block that was created there, that was printed there, we never really made it down on the Tuesdays, or last week, Tuesdays. The open was the 28th of May, starting from the Tuesday, because on the Monday it was a bank holiday. But throughout that whole week, price action never got to make it down into the order block. We did end up trading into a opening gap, which we rejected for trading and taking buy side the following week. There's not a lot of data to analyze when having a look at the weekly time frame, apart from, well, if you go against a trend, then it's probably going to eat you alive, right? There's no major signs in the weekly time frame that we could turn around. But when we have a look at DXY, with the fact that we've had a rip to the upside taking buy stops, but we haven't had a rip to the downside taking sell stops. Because remember, when dollar is going up, that is a risk off scenario. Risk off means that there's more capital flowing into the dollar than all the other asset pairs, which is the BTC, which we saw a decline, XAU gold, which you've seen a decline, euro, which you've seen a decline, GDP USD, which you've seen a decline. It's only the stock indexes which we haven't seen that much of a movement, which is a cause of concern at this point in time, because we've created highs on the week, whereas on the forex pairs, GDP USD and euro, I'm not saying they're always correlated, they're supposed to be tightly correlated, but in a good, put it this way, what I like to see is all of them in the same direction. Everything that is denominated in dollars or has a dollar pair in it, which is GDP USD, euro, and anything that you'd use dollar to buy, which would be risk on assets, BTC included, would fall. And we haven't seen that. We haven't seen that velocity that we was looking out for when looking at GDP and euro, right? So that's the sentiment that is against the favor of a continuation in bullish price action. We've also been bullish for the last 2 days, going into the ending of the week. This area is, or was, a point of interest, as it was the area in which a lot of liquidity would have been in, and it's taken. The liquidity has been taken. Not only has been taken, but all-time highs liquidity was taken. But we've seen a sharp rejection. But not only that, we failed to see a candle body closure above the highs. So that leads me to believe that, with especially Friday taking buy stops and sell stops out, we could create a 3-pin pattern and then roll and take sell side out. And we could trade down into, so we've obviously got the lows there. We've obviously got the highs, lows, highs. We've got an area, we've got a bearish hammer, which created the 3-pin pattern before we took off to the upside. So this area would be my point of interest. But if you was to whip out the Fibonacci and take a look at the 50% equilibrium of the whole range from the highs, from the lows to the highs, which is the dealing range for the month. You can see that 5295.50 is the equilibrium of dealing range low to high for this month. So if we were to continue to the downside, not only do we have the order block as a confluence, if you were to reject this area, which is 5329, but you've also got the equilibrium to look out for. So I am looking out for more price action to make my judgment. But if we were to continue to the downside, which I want to lean towards at this point in time, but I need more data to rely on, 529, 550 would be my point of interest. And it would still be healthy if it was to continue to the upside. But after seeing euro, gold, BTC, GDP USD declining in price, taking sell stops for the week, then you compare that to ES, where we haven't. Not only did we not take out sell stops for the week, but we actually ran out the highs, creating all-time highs. That is the type of deviation in price. That's the type of reverse correlation you don't want to see, or I don't want to see. So my expectation is that ES, NQ, and YM is going to follow through to the downside for this week. And this week is going to be a busy week because more rate announcements are going to be made. So next week is going to be very interesting to see what happens. I'm leaning towards the short side, but right now I'm going to be neutral until Monday, at least Sunday. I want to see how Sunday and Monday pans out. Yes, Monday we could have a sharp downside movement, which we could take the lows out at 5,329. And if we do see that, then I'll be looking for a manipulative spike to the upside to 5,33925, or potentially to this low here, to run and take this order block, because you consider this as an order block. Is it the highs? Did it make highs? Well, 5,368 and a quarter, 5,368 and a quarter. So this is what you would call a double top, a classic double top. Five, 3, 6, 8, 2, 5. Classic double top. Classic double top. Sell stops taken. Sell stops taken. Run. Take out this bullish engulfing, and then obviously see where price action's most likely to go from there. If you have a look at the intraday time frames briefly, we can have a look at 8 a.m. buy stops taken, then we took sell stops. 9 o'clock candle retraced back into the previous 8 o'clock open and close. 10 o'clock took 8 o'clock 1 hour time frame buy stops. 11 o'clock inside hour. 12 o'clock come towards lunch. 1 o'clock buy stops, and then we continue to sell off ever since. Inside candle, so we could see that if we were looking to take loads out, or where a lot of the pain would lie would be to the downside, because everyone's looking at this week's price action from the lows all the way to the highs and not considering that there's a good chance we could sell off in price. This Fibonacci here is this week's low to this week's high. If we retrace, then 5,316 is a point of interest, whereas this 5,295.5 derives from the macro, so the monthly the monthly lows and the monthly highs. So that's what we're going to be doing here. So I'm looking for a continuation to the downside, but I need more confirmation. If we see candle body closures about 5,385.5, the bias will be negated and we'll be back to the drawing boards. But for now, I'm leaning more to the downside. I want to go neutral, but on the intraday time frame, it's looking very saucy in the sense of sell side being taken and trading below the 5,339.5 previous buy stops, which was taken. So if you have a look at yeah, that's looking good, man. I'm gonna wrap up, leave it like that.